Topic is cost accounting. So cost accounting, cost is the meaning of cost. Cost amount is the resource given up in exchange for some goods and services. The resource given up are money, and money's equivalent expression is in monetary units. So it is a cost which is used, which is occurred for buying the goods or raw material for the production. So that is called cost. Now let's see the cost accounting. So cost accounting is concerned with the recording, classifying and summarizing cost for determination of costs of products and services, planning, controlling and reducing such costs, and furnishing of information to management for decision making. So the cost accounting reveals the actual cost in the manufacturing of a product, and so accounting is involved. So when the accounting is involved, there will be summarizing and planning, controlling, reducing of costs will be done. The main purpose of cost accounting is to taking decision according to the manufacturing costs by management, and cost accounting in Indian context. So let's see the how the cost accounting is used by India. So increased awareness of cost consciousness by India industrialists with a view to ascertain cost more accurately for each product or a job. So here in India, the cost accounting used to know the actual costs which are occurred for the production of a product or to complete a job. The next thing is growing competition among the manufacturer led to fixation of price at lower level, so as to attract more customers. So here there are different types of products available in the market, so it will be the competition between the manufacturers. So whoever quoting the lowest price, those products will sells more. So in this context, the manufacturer should know the costs accurately to fix the price at lower level. And the next thing is economic policy of government, which laid emphasis on planned economy with a view to achieve the target, led to the cost reduction programs by Indian industrialists. So there are programs conducted to reduce the costs for manufacturing of products, and increased government control over pricing led the Indian manufacturer to give utmost importance to installation of cost accounting. Earlier there is no any cost accounting system in India, but there are some restriction for fixation of prices of products in India. So these things gave importance to cost accounting. See the definition of cost accountancy. The cost accountancy as the application of costing and cost accounting principles, methods and techniques to the science, art and practice the cost control and assessment of probability. So profitability, the ultimate thing is the better ascertainment of profitability. For that, the company or the firm should know the actual costs which are occurred in the manufacturing. So these costs are calculated by using cost accounting principles, methods, techniques um, to find out the actual costs and profitability of the firm. Now let's see the scope of cost accountancy. The scope which we can see in cost accountancy is first of all the costing and cost accounting, cost control techniques, budgeting and cost audit. So let's see one by one. So first, costing. So the technique and process of ascertaining the cost. In costing involves the main thing is ascertainment of cost perfectly and accurately, and the cost accounting, that branch of accounting dealing with the classification, recording, allocation, summarizing, and reporting of current and prospective costs. So here will be the classification of costs is done, and those costs will be recorded in books, and those costs will be allocated to different cost centers, and summarization will be done, and the last thing, reporting of costs to the management is done in cost accountancy. And cost control techniques are very important to control the costs for more profitability. Here, the guidance and the regulation by execution action of operating and undertaking. So here there are things will be undertaken to control the costs. And the next, budgeting, an overall blueprint of a comprehensive plan of operations and actions expression in financial terms. So as earlier we discussed, there will be techniques to control the costs. So those techniques are used to allocate budget for the maximum utilization of resources. So here there will be a plan and operation to be executed according to the time and cost. Those will be explained in financial terms. And at last, cost audit. So, as financial audit, cost audit will be done whether the recorded costs are accurate and correct or not is finded out by conducting cost audit. The verification of the correctness of cost accounts and the adherence to the cost accounting plan, whether the plan which is prepared by the company is used by the accountants or not is checked in cost audit. Next is purpose or objects of cost accounting. The first objective of cost accounting is ascertainment of cost. So as we discussed earlier, the cost is ascertained to know the cost incurred by the company for the production of product. So the ascertainment of cost is done by using different methods and different techniques. And cost control, so if there is any excess cost or is there any idle things, if the company finds, so those cost can be controlled. And costs may plays main role in fixation of selling price. So determination of selling price is done by the costs incurred in the manufacturing of that product. So it is very important to quote lower level prices with the profitability. So for that, the company should know the accurate and correct costs for fixation of selling price, and frequent preparation of account and other reports. So the frequent preparation will help the company to know the costs and the wastage, or where the losses can be reduced by preparing accounts in regular intervals, and to provide a basis for operating policy. So by basing these costs, the company will prepare budget and plans for next accounting year. So the essential things of cost accounting, when a company using cost accounting, there are some essential things to be followed and to be expressed by the firm. The first essential thing is accuracy. So they should follow the accuracy in determining costs and determining the selling price for the product, and simplicity without any complications. The simple method should follow to for determination of costs and for budgeting and plans for next financial year, and the elasticity. So there should be an elasticity. There's, there should be scope to change the prepared budgets or prepared plans according to the situations uh, in the company, and comparability. So those are whatever the accounts prepared by the company should be comparable with another company and with the previous years to know the better position of their cars and the better profitability uh, of firm, and promptness. So the reports and accounts should be prepared in regular intervals. They must be ready for the management to take decisions about the costs and about the budgets and about the plans which they have to implement in the company, and periodical preparation of accounts. So in a regular intervals the accounts should be prepared and submitted to the management for the better understanding of work is going on in company, and reconciliation with the financial accounts. So whatever the budget allotted from the financial things, whether they are reconciled or not, whether the excess amounts are recorded or the whatever the uh, allotted budget is used in sufficient way or not, these reconciliation with financial accounts must be done, and uniformity. Companies should follow the uniformity in preparation of accounts. If a company producing the same product existed in the market, so this company should follow the same accounting system or the prescribed system for preparing accounts. So with this the comparability becomes easy, and the understanding levels will be increased. Even the normal person can also understand the accounts, and equity. So the equity levels should be there in the cost accounting. Let's see the advantages of cost accounting. So first, the benefit to the management. So here, the purpose of preparing cost accounting is to take decisions for the uh, buy or make, and this cost accounting will help the management for taking better decision for the development of a firm, and benefits to the employees. So benefits, how it benefitable to the employees means they can learn how to ascertain costs, how to allocate, how to determination of costs, and how to prepare the cost accounting, and how they can use the budget a lot to the what are the plans they prepared for the implementation. So those things will be gives facility with the cost accounting, and benefits to creditors. So the creditors can know the financial position and the cost they are in, they are incurring in the manufacturing. If they are incurring more costs for the products uh, which are other companies are producing with a lower cost and with a more profitability. So here the creditors can know the cost systems and settlements of costs and to give away the credits to the company and benefits to the government. So with this the government can make policies according to the costs of different industries and with of different companies. By observing, ascertaining, the government will prepare policies, plans for the better economic development and benefits to consumer and public. If the costs are low, then the selling price will be low. So these selling, if the low selling prices are there, those are will be affordable by the consumers. So with the cost accounting, these are the benefits or advantages. So limitations of cost accounting. The first thing is it is expensive. So because small firms cannot afford the cost accounting system, because the separate accountant will be there and the ascertainment of costs, allocation, budgeting is very expensive. So periodical cost accounts are prepared. So this is the very expensive thing which can be possible in a medium and large scale businesses only. So this is one of the limitation of cost accounting, and the system is more complex. Sometimes costs cannot be differentiated, so there will be more confusion and complex in ascertaining costs which are incurred in production, and incapability of same accounting method and same techniques. If the one technique is followed by the other company is useful for them, if the same the technique is followed by the other company, it can be incapable for that company's nature. So this is one of the limitation of cost accounting and not suitable for small scale. So as we discussed, it is expensive, so it is not suitable for the small scale units, and lack of accuracy. So as I discussed, the ascertainment of cost and the differentiation of costs are more complex. So with that, the accuracy will be less in preparation of costs, and it lacks social accounting. So here, though, the company will completely concentrates on their financial positions, that means costs. So with that, the social accounting will no more having no more importance in accounting systems. Let's see the definition of cost unit and cost center. So cost is unit is a quantitative unit of product or services in relation to which costs are ascertained. So cost unit means here the actually incurred costs are calculated and ascertained in cost unit. So in cost center, it is a location, person or item of which equipment in respect of which cost may be ascertained and related to the cost unit. So these cost centers means after calculating the cost, these costs are transfers to the cost centers,